What's up, guys? In today's video, I'm going to be covering 4 Fidelity Factor ETF funds. They're all dividend related and they're all pretty new, all 2 years old or less. Some of them just started in 2018, so let's go take a look at them right now. Welcome back to Money in Life TV. It is so good to see all of you guys again. As you guys know, I am Mike, the CPA. Today's video is to really give you a nice overview of some very new, very low cost Fidelity funds. So let's just dive right into it. Fidelity on their website, not too long ago, within the past 2 years, launched some factor ETF funds, and there's 8 of them in total. And I think the reason they did this, once I really got into it, was it's low cost. They realize Vanguard is one of their greatest threats. They wanted to create these low-cost ETFs to make them available to people who invest on the Fidelity platform. Now, the dividend funds I'm talking about are all going to be right here. I'm going to show you on a spreadsheet that I've put together for you guys, but I just want to show you. So these are very low-cost ETFs that you can buy from Fidelity, and they're almost all commission-free as long as you meet a few of the following criteria. It's free commission. Offer applies to online purchase of Fidelity ETFs in a Fidelity brokerage account with a minimum opening balance of $2,500. Says the sale of ETFs is subject to an active assessment fee of 1 cent to 3 cents per $1,000 of principal, so basically they mean $1,000 invested. Fidelity ETFs are subject to short-term trading fee by Fidelity if held 30 days or less. So they're pretty much commission-free if you're going to hold them more than 30 days, and as long as you have $2,500 or more in a Fidelity brokerage account. Now, I'm not saying you guys have to use Fidelity. That's not the point of this video. You guys can use Robinhood or other platforms. I use Scottrade, which is now TD Ameritrade. I might change that in the future. But anyhow, I wanted to show you that these are what the factor ETFs are about. And there's 8 of them total, but we're only covering 4 today. All right, guys, the purpose of this video is to really give you a nice overview of these 4 newer factor ETF dividend funds that Fidelity offers. Now, if you want to know, these aren't the only dividend fund that Fidelity offers. There's other ones as well, but I thought, let's just start here. Let's just start at this point. And then I think what I want to do is go over each one with you in detail, and then towards the end of the video, we'll compare them against each other. And then I've given you a little bit more information in this spreadsheet towards the end of this video where we compare these 4 specific funds to Vanguard's funds. And of course, the spreadsheet I'm showing here, as always, is completely free for download, and I'll leave links in the description section of where you can find it. All right, let's talk about first the Fidelity High Dividend ETF Fund. Ticker symbol FDVV. And a date of research, just so you guys know, is March 11th of 2018. I've included the links directly to the Fidelity website, so you can go back to it at any given time. And when I actually started going through the Fidelity website, oh man, I got lost. It is so different than Vanguard's website. They throw numbers at you left and right. If you like numbers, that's great, but man, it is kind of organized chaos, in my opinion. Maybe I'm just new to it, but anyways. So what I've done is I've compiled all the information onto one spreadsheet page. When you're actually going through their website, in order to get all the detail I'm showing on the screen, you actually have to go to 5 different web pages on that particular investment. Okay, so starting off with the dividend yield. So the high dividend yield offers a 3.57% yield at this point. It's only been in existence for 1.5 years, because like I said, all of these funds have been in existence for 2 years or less. The price is currently around $29 to $30 a unit or a share that you can purchase these. The prospectus, I'll leave it right here. I would encourage you to read it. I'm not going to read it to you. This isn't story time, and I don't want to put you guys to sleep. But feel free to go back and read that at your own leisure. Expense ratios on these things, they're all pretty much the same. It's 0.29%, which is very low. Honestly, that's extremely low. I know Vanguard's a little bit lower. I think Vanguard's between 0.1% to 0.2%, but it's not much higher than Vanguard's expense ratio. So these are pretty low cost. Okay, let's look at some of those returns year to date. And it shows on their website 2 types of returns. It covers the NAV, which is the net asset value. I'll leave a link to a description of what that is in the description section down below. I'm not going to try to explain it here. There's too much detail to go over. And then the market return. For purposes of this video, I'm just going to say look at the market return column. It's a little bit simpler to understand. So if year to date, this thing's in 2018, it has about a 2.7% return. And skip the 5 days, 4 weeks. 6 months is about almost 13%. and 1 year is about a 13% return. So not too bad, not too bad. What does it own? I always, you guys know I really like to know what the heck these things own, because I'm not clueless about what I'm actually truly investing in. So it owns stocks like Apple, AT&T, Verizon, JP Morgan, Microsoft, ExxonMobil, CenturyLink, Bank of America, Chevron Corp, and Wells Fargo. And just so you guys know, what I did is I've also put the top 50 holdings right here. So if you're like, what else do they own? Now, this one owns 101 stocks in total, 101 Dalmatians, folks. But if you go down the list, you can see all the stocks, or the top 50 stocks that this ETF fund holds. Moving on. Okay, I know I'm going kind of fast, but it's on purpose. Industry exposure. So you can see 12% of its holdings are in oil and gas related. Then they have real estate investment trust, banks, which is financial institutions, and so on and so forth. And as you can see, this one is 96% invested in domestic U.S. stocks. Market capitalization, it mainly owns large cap stocks. So 3/4 or 75% of its portfolio is held in stocks with large market cap. So large, blue chip type of stocks. And that is FDVV. That's the first one. Now let's go on to the next one, which is FDRR. FDRR stands for Fidelity Dividend ETF for Rising Rates. So pretty interesting name, considering, because it takes into account the rising interest rates we're starting to experience. So I thought that was kind of cool, a little bit different. The prospectus is here, same expense ratios, website link right here to go check it out on fidelity.com. It's all there for you. Let's look at the returns though. Market return is 2.7% over a 6-month time span. It's given us about a 12% return, and a 52-week return is 15.73%. But it does have a smaller dividend yield by almost a full percentage point, so it's at 2.86% dividend yield. And the price is a tiny bit higher, but it's also got a higher return. So what does this one hold? It holds stocks like Apple, Microsoft, Johnson & Johnson, JP Morgan, Intel, Cisco Systems, Bank of America, Pfizer, AbbVie, Oracle Corp, etc. And then this one owns 111 stocks in total, and I've listed the top 50 here for you guys, so you can go ahead and check that out. And just like the last one, it holds even more large cap stocks though. It has 83% large cap stocks. It's much more heavily invested in pharmaceuticals, technology. It still has a good chunk in bank or financial stocks. But I think that's where the return is coming from, the higher return. I really think it's that tech is driving the little bit higher return in this specific dividend ETF. So just like Vanguard, Fidelity has some international ETFs as well that are dividend-paying ETFs. These things are super new. So the ticker symbol on this is FIDI, this is the Fidelity International High Dividend Yield. Now this thing, years in existence, it's been 0. It just came out in January of 2018. So this thing is brand spanking new. And the price is currently around $23 a share if you're looking to get in. The returns, though, not so hot starting off. So year to date, it's down about 6%. Because they haven't paid any dividends out of this thing yet, I'm not sure what the yield's going to be. I'm guessing it's going to be like 3 to 4%, maybe higher. I know some of Vanguard's international funds had a higher yields. So it might even be as high as 4 to 6% as well, but we just have to wait and see what it's going to be. And I imagine that all of these funds are paid dividends on a quarterly basis. These are the top 10 holdings. I do not know these companies except for Royal Dutch Shell, which is an oil company. And most of these I do not know what they're about. So if you know what they are, great. That's awesome. But from an industry standpoint, they are mainly invested in financial stocks and oil and gas companies, insurance companies, automobiles, things like that. So mainly like financial product-based companies. And as you can see, look at 30% is in financials, then consumer discretionary, you have some energy stocks and things like that. A little bit of utilities, not much, but for the most part, it's financials that are driving the performance of this investment. From a regional exposure, most of these international stocks are located in Europe, so you're investing in European companies, with the other main portion of that being Asia, and then about 13% of that in the United States. So pretty interesting. United Kingdom is the single country with the most exposure within this ETF. Now, me personally, I'm not looking to invest in this particular international dividend fund. I want to see a little bit more history, a little bit more track performance. I know Vanguard has a number of international funds that have a much longer track record than this, and I would probably consider looking at those instead. So I'll link all that up at the end of this video. All right, let's go over to FIVO, which is the Fidelity International Value Factor ETF. Once again, another international fund. It's still just like the last one. It came out at the beginning of 2018. So this thing hasn't even paid a dividend distribution yet. Oh, and the expense ratios on the international funds are a little bit higher. Instead of being 0.29, they're 0.39% for Fidelity. This one hasn't lost as much as the previous one we just looked at, but it's still down 5.5% year to date. It has a good chunk in cash at the moment, but it says that this could mean something else other than cash. They're invested in Nestle, Royal Dutch. Once again, as you can see here in the sector exposure, they have a lot of their financial-based companies that they're invested in, industrials, consumer discretionary, healthcare, and things like that. But go ahead and look these over at your own leisure. That's why I'm providing this spreadsheet for download. Just like the last one, they're primarily invested in European stocks, and the other main portion of that is Asia. So not too different than the last one, honestly. Maybe I think they have different holdings than the last one, but for the most part, they're probably pretty similar. Let's take a look at the top 50 stock holdings in detail here real quick. So what I've done here is I've taken the 4 dividend ETF funds were mentioned in this video, and I've compared them to say, okay, which companies does each one own? So a lot of them own the same companies. There's each one, like in this case, you can see Apple and Apple are owned. Wherever it's highlighted in green on this side, that means the other one owns it as well. So you can kind of see which investments they have in common. And then over here, you can see from the international holdings which ones they have in common as well. So FIVA has 107 holdings. This one has 96 different ones for FIDI. And you can just kind of compare and contrast the investments within that. Now, based on the performance right now, guys, from what I'm seeing, if it were me personally, I'm probably going to choose FDRR as the investment right now because it has the better track record so far. And I think it's going to continue to outperform FDVV. But only time will tell, right? Who knows? The returns can definitely change in the future, as with any investment. So overall, if just summarizing this up, if you're looking to invest in these low-cost dividend ETFs that Fidelity offers, I'm probably going to choose FDRR. Keep your eye on the international dividend funds, see how they perform as time goes on, and see how they do. I didn't graph them out here because they basically don't have enough track record to justify me graphing that out and pulling that data. So I think after a year or two, it would be worth looking at. But right now, it's down. I would probably encourage you to look at Vanguard's international dividend funds. If you have other international dividend fund ETFs that you would recommend, please let me know. Okay, guys, I really hope you found this information helpful. I know I did like a really quick and dirty overview, but that was on purpose because I wanted to get through this information kind of quickly, just so you guys can have a better idea of what other investment options and choices are out there for you. And that's what I love to do. I love to compare and contrast investments of different kinds because that lets me know that other things are out there and helps me determine what the best investment might be for my portfolio. So I hope you guys did find this information helpful and useful. Make sure to download the spreadsheet when you get a chance. All right, ladies and gentlemen, thank you so much for taking time out of your day to hang out with me here on YouTube and to go over this information with me. I really appreciate it. If you liked the video, let me know by hitting the like button down below before you leave. Be sure to share this information with a friend, especially if you have a friend who is really into investing or maybe who is looking to invest with Fidelity. I'm sure they would find this information helpful. Also, and be sure to subscribe if you have not already. And we basically, on this channel, I try to post at least one new video per week that covers things like finances, investing, taxes, and so much more. So if those are subjects you're interested in learning more about, I would highly suggest subscribing to our channel by hitting that red subscribe button down below. All right, guys, thank you so much. I'll see you in the next video. Peace.